Well, as we continue to keep our eyes on the market trade and considering the recent really big weather rally throughout much of the grain trade, we're watching that along with, of course, the demand picture here for U.S. commodities and the global picture. And then we got big USDA reports coming up at the end of the month. We're going to talk about all that here today. Joining us now, Doug Christie, agricultural commodities fellow at Hedder, is with us here today. Doug, thanks so much for the time and joining us on the show. I hope you're doing well.
I am. Thanks, Jesse, and glad to be here.
Well, let's dive in and let's just start with the obvious here. The last few days, this grain market, a massive weather rally, corn, beans, the wheat trade overall. And just looking at this, obviously we know there's a lot of concern, dryness in the Midwest, having a big impact here. When you look at just this overall weather rally, what's the biggest thing on your mind, and what should producers be concerned about, thinking about here when they're watching a volatile market like this one?
Yeah, I think you've absolutely touched on what the key driver in the market at the moment is, and that's weather in the U.S. Corn Belt. We came out of WASDE reports with really kind of unremarkable transition from May to June. But since that time, we've really been focused more on what's happening in the here and now with weather. I think there's several places to look at, but really the Central Belt could use some relief, both in terms of precipitation and a back off in temperatures. We had some concerns earlier with the Northern Plains. Those have been moderated somewhat, but still an area to watch. So there's plenty of producing areas that are vulnerable to weather markets. When I look at kind of the scope of the commodities you mentioned, corn, soy, and wheat, I think, looking from the June WASDE reports, I would say the corn yield is the one that looks the most vulnerable relative to where USDA had pegged it initially. So, I think we're seeing reaction in all the markets, but corn probably the most strong.
Well, and Doug, I think about it as well, and the strength in this rally, obviously very good for producers who maybe missed out on the last rally. They have an opportunity to do some marketing, but I know as well that, this rally is continuing to make us even more and more less attractive on the world market, on the global scale. Our demand right now for U.S. commodities has been pretty yucky as of late, for lack of a better term. Doug, can you talk just about the demand picture and how that fits into this equation right now?
Yeah, I think that's an excellent perspective. I mean, I do think we've seen U.S. commodities be relatively less competitive versus particularly Brazilian origins for corn and soy. And so, we even saw some cancellations of U.S. corn several weeks back. So that situation where the U.S. is not competitive at a time of year when we should still be pricing in, or at least closer to South American prices, I think that is a bit of a concern going forward. One aspect it makes me look at is when you see the U.S. being uncompetitive on cash prices, you do have to question whether futures are running a bit ahead of where the cash is at. And so the rally has been weather driven, but I think longer term, it may be vulnerable just because the U.S. gets higher and higher priced as those futures move up.
Well, and I think about the next milestone in front of this commodity trade. Obviously, we have the end of the month, June USDA reports, got the quarterly grain stocks, the acreage report coming up. Typically a very, very big report. And, you mentioned the June WASDE a few times, and, moving into this end of the month report, I wonder what we could see just with this rally, the demand picture, some of the concerns about acreage, USDA. Hard to say sometimes what they might do, but obviously this report at the end of the month going to be a very key milestone for us here in this volatile market environment.
Yeah, absolutely. I mean, it's always a big report, but particularly coming on the heels of what's been a pretty significant rally, it's got everybody really on their toes. I do think that this report is significant because it represents a transition from a forecast approach from USDA to more of a surveyed approach. And so we get a couple of things there. We get a real snapshot of the planting side with some surveying being done to lock in those numbers. And then you also get a bit of a confirmation on the old crop S&D. So looking at stocks, and if those aren't matching up with what has been printed in the S&D to this point, then you start to ask questions about, was production bigger or smaller than we initially thought, or has something come in the demand picture that's not captured in the current S&D? So I think it's really a meaningful report, and it comes at a really critical time for the markets.
Can you expand upon some thoughts maybe on the outside markets and how that's all playing in? Because obviously inflation and worries about interest rates and more, and just the cost of money being more expensive is still out there. And it's maybe not the headline right here and now, but we can't forget that that's underneath this overall market environment as well, Doug.
Yeah, the outside markets always are going to touch on ags. And so, right now, I think the most recent development, we've seen the Fed take a pause on interest rates. And I don't think that interest rates are necessarily a big driver, but I think an environment where we're transitioning out of a period of steady increases to some sort of slowing down, at least, there may be some more increases through the balance of the calendar year. But I think the fact that, that might be marking a bit of a return to normalcy for the economy, I think that's long-term good for markets. So, less intervention and more kind of stability, I think, is good. When you look at some of the other markets, looking at energy as an example, crude in a $70 to maybe $80 range on the upside, that's not really indicative of a robust world economy. So I think, you're seeing a little bit of a break on commodity prices if you look at the commodity indexes led by energy. And, we'd like to see some resolution to that, maybe a little bit more confidence about global growth going forward that could lift those prices and also be supportive to ag commodities as well.
Well, Doug, before we run out of time here today, any final thoughts you have just on the broader ag commodity picture right now? Anything you're seeing, maybe chart wise, et cetera, or just any final thoughts you would have for folks to keep in mind here as we're working towards the end of the month?
Yeah, I think the one thing that we have talked about is just a relatively uncompetitive U.S. export market, I think, is a cause for concern, and maybe lend some support to a view that futures might be doing a little bit more work than they need to do initially. And so, from a cash marketing perspective, I look at this rally as an opportunity maybe to get some sales put on and take advantage of that move that we've seen, which has come really relatively quickly coming out of the June WASDE reports.
Well, great thoughts and insight, and we appreciate the time, and we'll look forward to having you back on the program again real soon with that. Doug Christie, Agricultural Commodities Fellow at Hedder, thanks so much for joining us here today. We appreciate it.
Thanks, Jesse. It's glad to be here.